Hello and welcome viewers to another one-to-one mining investment online content session. Today I'm very pleased to be joined by Ken Hoffman at McKinsey. Ken is the head of their EVs and battery materials division, and Ken's going to be giving us a presentation today looking at the state of EVs and the battery technologies that are coming into play globally. Ken, I'll leave you to explain a little bit more detail about exactly what you're presenting within that segment, but thank you very much for joining me today, and I'll hand over to you to take us through your presentation.
All right, thanks a lot, Adam. Again, this is Ken Hoffman. I work for McKinsey. I help run our global EV battery materials group. We're looking at what are the trends in battery materials, the entire value chain from the mine all the way through the EV and beyond, and recycling and that nature. And so by having that entire value chain that we that talk to clients gives us, I think, a pretty good perspective and what's going on in terms of the battery industry. In terms of today's talk, again, can't wait to actually get in front of an audience for real, doing it from my living room. I wanted to talk a little bit about where we think the world stands today in terms of COVID. And what the economic changes could be, as well as also the bit of the aftermath of COVID, and how governments may react in terms of legislation that could impact the EV battery industry, and then go through where technology stands. Obviously, at the end of the day, EVs need to stand on their own 2 feet in terms of technology going head to head with internal combustion engines and where that stands today. And then finally, the impact on the metals. And I'll talk about the 3 main EV battery materials that we tend to talk most about: cobalt, lithium, and nickel. With that, I wanted to start to talk a little bit about COVID and where things stand today. Obviously, not good news. This is obviously the black swan event of 2020. Something we'll be telling our grandchildren about someday. Just incredible and terrible, and we hope that the world recovers from it soon, but the impact is obviously very, very large. The way we at McKinsey sort of look at the economic response to COVID and how the recoveries may go, we put together 9 different scenarios. And that all goes through, how controlled and rapid is the spread and the control of that. Things like when will different treatments come forward, and can we sort of keep people in a certain part where they, public health can sort of take effect. And then also, how is government responses coming to help out the economy through this terrible time? The 2 main areas that tend to always come to fore when we talk to hundreds of executives around the world, and what they believe will happen is what we call right in the middle there, A3 and A1. A3 says the virus is contained and growth returns. Not a perfect V-shaped recovery, more a U-shaped recovery. But that seems to be the most likely candidate, and today is June 5th, where we've seen much better than expected, at the very least. Employment numbers here in the United States, still pretty horrible, 14%, but still better than the 19% unemployment that was expected. And A1, I'm sorry, right in the middle of the chart says, things start to look better, but then there are recurrences of the virus that really sort of hamper. That will take time to tell whether there will be a second wave or third wave of COVID that hits the world, and that could definitely derail any economic expansion. Going on to the next slide, the survey, and as I said, if you look at the survey, and this was done, I believe, 2 weeks ago, over 2,000 global executives. A1 at that point was considered to be the most possible. A very big fear about recurrence of COVID coming throughout the world over the next 6 to 12 months. A3 came in second, and B1, which is actually a worse case scenario, and B2 for that matter, quite a bit worse scenarios were seen as potential. And so that's sort of where the executives of the world sort of see this going on. Putting in actual GDP forecast numbers, and this is U.S. GDP. A1 is shown there in the darker blue with a pretty swift 8% decline in GDP, and then over the next 4 or 5 quarters, this time frame is sort of shortened. You would actually see a recovery back to 0 at least. A3 would be a much more drawn out area. You're almost talking 3 years before we will get back to GDP growth in the US. And so the difference between those scenarios when you actually look at them are quite significant. And so that's going to be really important to the recovery of the world. Now let's just look a little bit about, what are things going on? And this is a few weeks old. What are we hearing from clients about COVID and how this could go forward? A couple of things here that everybody always wants to know. First question is, where is the technology heading? How are we working on advancements? If you go online, you will see hundreds of claims of what's going to be happening in the marketplace. And so we'll go through what we think is more realistic. But the big issue is with COVID. There are a number of studies that are coming out talking about how heavy particulate pollutants in the air can spread diseases such as COVID or viruses such as COVID more readily. Will there be public pressure to, people sort of like having clean air and they've seen what it's like? Will they sort of demand that type of clean air is perpetual, that we do something about that? And will we see policies? Europe seems quite adamant that they will speed up their COVID response to help the economy getting back on their feet by investing in green technologies. It seems as if China is doing the same thing. Recently, you've seen China and Japan come out with protocol that will put 900 kilowatt chargers as the norm, which is very, very large scale amount of electrons that can be delivered into the automotive, into the car. And so that seems to be portending to having sort of what consumers around the world are all looking for in an EV. And at the end of the day, the consumer is looking for at least what they have today with an internal combustion engine. And what they have today is anywhere from 600 to 900 kilometers in range, and they have a refueling time of 5 or 6 minutes. If they can get that in an electric vehicle at or lower cost, that makes a lot of sense to them. And then on top of that, you can add in all the technology and driverless and other parts of the car. And it seems as if that technology is being allowed in terms of battery chemistries and what's going on with fast charging capabilities. The infrastructure has to be put into place, and that's what China and Japan seems to be going for, is we will put the infrastructure into place so that when those batteries are actually on the market, we can refuel those cars in that time frame. And so that's really, really exciting trends going forward. The other questions we sort of get are how quickly will energy density happen? And that's not only for cars, that's also for stationary storage. A lot of people like the idea of having a large truck that could come into a small city and have a gigawatt worth of power, or put together a bunch of modules to very quickly get very large amounts of energy together so that you could hook it up to a solar or wind power grid, save the energy when it's sunny, et cetera, and then sort of go through that. And that's something that I think is going to be really important. So with that, I think, those are sort of the main questions that people need to deal with. Again, the EV industry will be something that's quite a bit different than the commodity copper industry, aluminum industry, steel industry. What we are finding is that this is a value chain that is very interconnected. The miners, the refiners, they all need to be locked together to try to understand how this works. A battery is a very specialized and very bespoke chemistry. There are not commodity blends that will be able to be used. And we're seeing that in massive production problems at many of the cell manufacturers. It often goes back to the raw material being used. And so the idea that there could be just LME grade material just thrown into any battery may not work and probably will not work. And so we always say to people from a mining standpoint, the most important part of your project may not be the geologist. It may actually be the commercial team who is able to be there and work together with your customer to see exactly what does that customer need and the detriments of the material that you're sending them to. And we're talking parts per billion in many of the chemicals that it's sending there. So that is something that I think is really going to be interesting and to watch going forward. Again, we survey an awful lot of consumers to see what they want in the EV, and that bottom two boxes that you see there is the most important thing, is range and refuel time. And it does not matter whether you are in Europe or whether you are in Asia or whether you're in North America or South America. Wherever you are in the world, this is what you want. And I do sometimes see some disturbing things online where people say, well, if you retrain the consumer to use a vehicle that only can get to 50 or 100 kilometers, when we talk to consumers, they do not want to be retrained. They just simply won't buy the vehicle. And the good news is technology will be able to give that vehicle to that consumer. Car companies have to think about the consumer, not what they can do today. They have to actually be aggressive in what they're thinking about this vehicle. And you are seeing solutions like that, things such as blade technology, which China is coming out with quite aggressively, where you can actually fit more chemicals in the same space and reduce the amount of packaging that goes in and around that battery. It gives you a lot more space to give you a lot more range. You're also talking about different technologies, be it pulse technologies or coating technologies of either silver or nickel on the battery pack to take more electrons to increase the recharge time. All those things are really, really exciting advancements in the industry, and I think they need to occur. Those who say, I want the customer to fit into my vehicle rather than me to address my customer needs will probably have a difficult time going forward. Overall, this will actually speed up EV technology. The government push is always something that has helped the industry, but quite frankly, at this point, while push will help, it's that technology, that the investments that we're seeing in technology that have really, really been exciting, giving better and better vehicles very rapidly to the market. Constantly, we are impressed at how cars and chemistries that we didn't think would happen for 3, 4, 5 years are hitting the market now. And there's more of these technologies that are going to go forward very, very rapidly. The competition is very, very fierce. And remember, the automotive industry is not only dealing with which cells make the most sense for their car and how their battery operating systems work, but there are dozens and dozens of new entrants into this area. So the car companies have a very, very difficult road ahead of them trying to figure this out, and they need to be ahead of the curve. They cannot be behind the curve here. They can't wait 5, 6, 7 years to see how it works in and then jump in. It will be too late at that point. And that is something that I think is going to be really, really interesting. And the winners and the losers, we probably don't know. That will change over time. Very similar to cell phones, how we saw winners and losers constantly changing. But the big winners at the end of the day did very, very well for themselves. But we are getting to that point of technological change of 750 kilometer plus range. There are companies that claim to have under 10-minute recharge times. And all of those things together will really be powerful moving forward electric vehicle technology and making it extremely mainstream. And as it goes forward, there will be a tipping point where people will just buy EVs. Internal combustion engines will be left behind. The overall growth that we see for the industry, and everybody who shows electric vehicle industry will show this type of chart just so massive in terms of massive increases. In terms of growth over the midterm, and ours goes to 2030. What I'd really like to point out is that light blue bar, ESS, stationary storage. Stationary storage is one of the more interesting parts of the industry. For the most part, a lot of stationary storage is put in because its real IRR, its return on investments, is actually very compelling today. And there are many utilities around the world that it makes a lot more sense to put in a battery backup grid than a natural gas peaking plant. And as that technology has really dropped off in cost, as much as 80% over the last 3 years, you're really seeing a movement towards this. And there are some, besides cost, there's actually some benefits in terms of stationary storage that is really, really exciting. Particularly the amount of time it takes for the electrons from a battery to enter the system and make sure the system doesn't have a brownout relative to peaking plants. I mean, it's seconds versus hundreds of thousandths of a second. So that is something that's really, really exciting to utility operators and why they're putting billions and billions of dollars into this industry. Expect ESS to be one of the potential areas for positive upside going forward, in addition to what we already see in mobility as being something really exciting. Overall, this is where battery technology stands. This is our map of the future of where we stand in battery technology. We are sort of right in the middle there of lithium advanced batteries to solid state lithium batteries. How this goes forward could go a bunch of different ways. There could be just an anode change that some companies are talking about where it's not solid state, it's a different electrolyte, but it is much more dense because of a different anode technology. The area that I spend my most time researching and getting excited about is the change in anode technology. It could be silicon, it could be a lithium chemical, we just don't know. There's a number of different entrants into the marketplace. Please, I'm very excited to see what Tesla's battery day, if it has anything interesting to say, but there are an awful lot of very exciting developments that have, that it has been a cathode market and technology change in the cathode market. That slowly will change. We're getting towards the end of that development, at least the current technology development for cathode. The real excitement is going to move over into the anode technology, where we can see a lot more electrons be developed in terms of more and more energy density, lighter weight, less space, etc. And so that's what really gets exciting about this type of technology. And so as we go to, the current state of the art is close to 300 watts per kilo, getting up into that 400, 500, 600 watts per kilo really makes a huge difference in terms of range and recharge time and the ability to just store electrons. That's what becomes really, really exciting, and we're pretty much there. What are things that companies are trying to do to make these batteries faster and charging in terms of better? I have a few of them here. I mean, here again, trying to go through the anode technology and to change. And there's a whole host of different ways that you can change the anode technology, from carbon nanotubes to lithium chemicals to lithium metal to silicon, silver, etc. There's a whole host of different things that you read about people trying to make anode technology better. The bottom line at the end of the day is what hits the market. There are numbers and numbers of really exciting in the lab experiments that you read about, but actually getting it into the marketplace is always the challenge. You're looking for companies who have been aggressive in the past in bringing to market technologies, and can they do so again with this? Other things is trying to replace the electrolyte. It could be a different type of electrolyte. It could be solid state. Again, very interesting stuff being done in that area. One thing to note is just the speed of this. I know Stanford University was tasked to looking at the hundreds of chemistries. And they thought with having hundreds of chemists in the lab, it could take them 2 to 3 years to work their way through all of these chemistries given to them. And actually, they decided to actually use a supercomputer and to use artificial intelligence to test and to make sure they had the best chemistry of all of them that they were given. It took around 2 weeks instead of 2 to 3 years to get all of that work done using artificial intelligence. And the speed that you're seeing by scientists and by technology to increase what technology is doing has really been amazing. And again, it's such a race to get the best technology out there, billions and billions of dollars going into this industry. That's why you're seeing this very, very rapid change. One of the things we do pretty much see is nickel in the cathode is something that constantly is being increased, trying to get that closer and closer to 100%. Manganese will also be a really interesting material going forward, particularly if nickel prices were to explode to the upside. Also holds quite a bit of electrons, but has a lot of issues. Could we see something, a nickel, manganese, aluminum type of cathode? That's very, very possible, and very exciting areas to get into. Will those be bespoke type of materials? Yes. So, just because I'm a manganese producer or a nickel producer doesn't mean I'm going to get a premium for my product if I haven't embedded myself in the marketplace, if I really don't understand the value chain, if I don't understand what those next generation cells need in terms of detriments. Otherwise, I'll be a producer that a number of lithium producers are today that thought that being a merchant supplier just into the marketplace and the price between contract lithium and spot lithium, it's almost double the price. And if you're selling spot lithium today into China, you have a very difficult road. If I have a long-term contract set up with a cell manufacturer, an auto manufacturer, I'm not doing so bad. So these are the type of things that I think will continue and are really important for the industry to realize, and very different. Miners aren't used to marketing their material like this, but they better. This is going to be the future for it. Exciting, a lot of upside, but a lot of challenges as well. And again, going to, what's going to make a successful miner in this space, they are not commodities. They are bespoke and engineered materials for the marketplace. And so that is something that will only increase over time, particularly as the competition and the technologies get more and more advanced. Bespoke manufacturers may really make 1,000 to 2,000 basis points increase in their margins over spot merchant producers. So that's something that's really important. Your commercial team is as important as your geologist. Having a great geology is fantastic, but if you don't have a customer who's going to pay that premium, who has worked with you and make sure that your material actually works in their chemistry, it really hurts your propositions. Partnership is the key to the game here. We're seeing a lot of partnerships develop up and down the value chain as value chains are introduced as quick as they ever have in history. When you look at Europe, there's a lot of gigafactories on the paper. When you look behind the scenes and what's the value chain behind that, they're still being formed. And so I think the same thing will probably occur in Europe as may occur in the United States. And so these type of changes, it's going to be important to be ahead and to work with folks to get those value chains up. Probably a once in a lifetime opportunity to be part of these value chains. But again, the winners will do quite well. Decarbonization is something that's really, really critical. If you look at the European Union, they're really demanding that all the way to the mine site that you tell them what your carbon footprint is going to be, what your water usage is going to be, what your chemical usage is going to be. You need to be very, very transparent. And your OEM will not deal with you if you can't give them that information. So if you say, look, I can't give you the information on my CO2 output, or I don't have the right sensors, or I can't tell you the water information, it'll be difficult for you to supply those European manufacturers, because they are actually going to the European regulator when they deliver a vehicle and saying this is the exact carbon footprint. So they need to have every step of that value chain understood and explained and verified. And that's going to be something important. The other part is localization. The European Union, by demanding this type of environmental and ESG regulations, is going to force some bit of localization, making sure those operations are in Europe. Again, this is very much for the green effort. It's also to try to keep some jobs in Europe, because they know the switch from chemicals, from the internal combustion engine to the electric vehicle industry will be the loss of jobs. And knowing the cradle to grave aspects of your product. Even mining companies are being asked, so you sent me some lithium now, how will I recycle it at the end of the day? How will I actually take apart and decompress all this and take it all apart and bring it back into the value chain? And how can I do that in a green method? Recycling methods for EV batteries are just in their infancy. There are some pilot tests out there, but they want the mining companies and the refining companies involved in that process. And so that's something that is a business that probably isn't a huge business for 7 or 8 years when current cars start coming back onto the market, but they want you involved today. And so you need to be involved, and you will be asked those questions for sure. Now, when we look at the metals, let's go through this. In the nickel industry, we sort of, this is the entire nickel industry as its whole. The driver today is still stainless steel. And if you look at nickel prices, they have come back a little bit of late. Part of it is the stainless steel industry. China has been heavily investing into their markets this year. If we look at aggregate loans given inside of China, they almost doubled from last year's level. So what China did in the Great Recession in 2008, 2009, they're doing again. They're really flooding the system with loans and money to try to keep the economy very, very strong. You've seen that in the iron ore price, which has been above $100 a metric ton, but it also has been showing up in consumer goods there in production, and that's helped out stainless. So for that standpoint, that's been a strong point going forward. The one interesting thing about all what's going on with COVID this year is you've actually seen as big of an impact on supply, an instantaneous impact on supply, as you have demand. A number of mines have been shut down because of COVID. In nickel in particular, you've seen some mines in the Philippines and even some mines in Indonesia and elsewhere that have seen governments shut down the mines because of COVID, or the mines just having cases of COVID, and so therefore, to be careful, have reduced or stopped supply. The other thing we've seen is very difficult to operate a mine in this area. If you can't fly your experts in and around to come in and fix equipment, if you can't fly in and around the parts that you may need very easily, it makes it very difficult to run a mine these days. And that is showing up in the supply of nickel into the marketplace. And so it's been a very, very difficult to mark, because typically, if we look at the Great Recession, which is more akin to financial crisis we've seen over the last 100 years, you first see the monetary stock market crash or a monetary issue, and you see supply drop, prices drop, and then that starts to impact operations of the mining industry. This was a virus that hit everybody. And so from that standpoint, you're seeing mines shut almost the same day that governments are shutting down the economy for COVID. So from that standpoint, the restart of those will be really telling as to how tight supply and demand is. Now, when we do look at nickel, we do split up nickel into class 1 and class 2 nickel. Class 2 really consisting more of the ferronickels and scrap areas. Class 1 really being the type of pure nickel you would need for a stainless operation, and EVs, as well as other industrial uses. And we do see class 1 as the more difficult situation going forward. EV demand for nickel is for 2019 was in the range of 150 to 175,000 metric tons. This year will be down because of COVID, but it could come roaring back to post plus 200 or even more in 2021. As nickel and EVs becomes a larger and larger percent of that nickel demand, it will have an impact on that marketplace. The stuff we used to talk about a few years ago about someday, well, someday's coming pretty soon. And so that's something to really watch. Again, the type of material that comes out of nickel must have 0%, 0.000 iron in it. Remember, the worst thing you want in a battery is any iron particles. So that type of material that's going to be in, there's going to be really difficult to come by. It could be difficult to procure. And those who have tied up long-term agreements with real high-quality producers probably are in much better stead than those who think they can just go onto the market and buy it. Even if you look at in inventories, we did see a few years ago how LME and SHFE nickel inventories could really plunge off a cliff very, very rapidly. So if there is a need for that material in the marketplace, the exchange inventories may not be a long-term solution for you. As for class 2, a lot of that depends on recycling and scrap collection, et cetera, and how that will impact that market. But both of these markets could be under some pressure, particularly as we approach 2025. We look at nickel sulfate, and one of the things we do is we do full cost curves for the nickel industry as well as the nickel sulfate industry. It's a very flat curve for nickel sulfate. And that's something that as a supplier you don't really love. You'd rather see a far steeper curve. That means that low-cost producers really have a huge advantage in the marketplace. But other than a few producers here, the curve for nickel sulfate is relatively flat. And that's going to tell you that you will need to see new supply rush into the market and actually flee the market really quickly, depending on prices. And that's what flat curves mean. But there are quite a few different areas. We spend a lot of time trying to understand the cost at the granular level for both nickel producers and nickel sulfide computers. And this is really important stuff to know as you're getting into the marketplace. Now, as for lithium, the lithium market has sort of seen a tale of two worlds. The long-term demand numbers that we're seeing for lithium only rise. The short-term markets for lithium are dreadful. The last numbers that I have seen from fast markets, the bottom end of carbonate on the spot market is all the way down to 5,600 per metric ton. So huge drop-off. I would assume most lithium miners at the low end of the spot market are break-even or losing money. And you have seen mine supply really curtailed because of that. And both carbonate and hydroxide, and that has been a huge issue on the market. But price is something that has really collapsed in the lithium market. So while that long-term future looks incredibly bright, the short-term market is obviously a mess. There's many assets publicly said for sale. There probably needs a massive consolidation in the lithium industry going forward, particularly as we look at a market growing this fast. You're going to need big companies with deep pockets, so that when the demand really starts to roar, people have those deep pockets to come into the marketplace. And as I continue to say, you're going to need a very bespoke material. You're going to see something where only certain companies will have the level of expertise needed to supply the lithium products that the cell industry and the auto industry are going to need for those very high-end battery materials. So I think the days of probably the mom and pop lithium producers will be very, very difficult unless they somehow come together and form large corporations that can work with and deal with on a very large scale when we start to talk about 20, 30, 40, 50 million vehicles a year. Massive, massive markets. And they're going to need massive companies to do that. Again, if we look at spodumene cost, current spodumene prices, this was a few weeks old, I believe are actually below 480 a metric ton now. So we're well into the cost curve for spodumene. And there are some very distressed assets out there. Again, some publicly for sale. So that is something that really is going to be something that we're going to have to look for. Now, cobalt is always a bit different as a byproduct material. A lot of cobalt production does depend upon what's going on there. In terms of demand, these are our latest guesses on where cobalt demand could come from. A lot is going on in battery technology to try to take cobalt out of it, being sort of LFP batteries being used in blade technology, or other technologies that use an NMA type of battery technology. You either greatly reduce the amount of cobalt in the battery or you take it out altogether. We don't exactly know which will be the most commercially viable battery for the marketplace, but as of this point right now, our most likely case is we will see a pretty significant increase in cobalt, but it may not be the tightest material. And so that is something that's going to be very, very interesting to watch longer term. All depends on technology. One area you will see quite a bit of cobalt coming from is recycled material. There is a huge effort to recover all the cobalt from batteries, and very much to the point of catalytic converters. As you saw the PGM particles reduce significantly in better and better versions of catalytic converters, the old catalytic converters, as they hit the market, just had such a multiple more of PGMs in them, sort of offset the new needs. Even though you're producing more units, you could able to use fewer older units. The same thing could happen with batteries. When you start to see those 111 batteries come into the market with 33% cobalt, very heavy cobalt rich, going into batteries that say are 90505, just have very, very little cobalt in them. The supply of recycling of cobalt will be a really interesting area. Now, who can recycle it the best? That's a huge question, to see which technology actually will recycle these the best and the most environmentally friendly. That's sort of a different area, and there's a lot of pilot plants going on there around the world. It's actually a really exciting area. Overall, we do think that there could be some slight chance of a shortage around medium term for cobalt. Again, COVID is going to change this aspect in sort of 2020 to 2022 timeframe. Maybe as we come back, if EV sales really come back very, very strong, and the battery technology is still using particularly 622 instead of 811 chemistries, that could have an impact here. But again, this is something that's going to really be closely watched to see how close does cobalt come to having anything like they saw a few years ago when the tightness was extreme. Now, lastly, look at where can we go from here. The battery industry, to our views, is very similar to the semiconductor industries, where you will see a very large change in technology and then a lot of incremental changes, and then another big change in technology and then number of technological changes, and those changes will become closer and closer together. That's exactly what's happened to the semiconductor industry over the last 70 years. And it could be the very same thing that occurs in the battery industry. I think it's most important to think about battery chemistry as technology, not as automotive. Automotive industry has traditionally had very long cycle times, 7-9 years. Technology industry, and this is the way a company like Tesla would look at it, is 2 to 3 years. By having that much more compressed area, it makes competition much more fierce. It makes technology change much, much quicker. The risks are higher, obviously. And so how that all works together is going to be something that people are going to look at. But the winners could be very, very dominant players in the marketplace. And going back to the cell phone example, the cell phone's change in technology is something that was really, really rapid and changed. Watch for anode technology. I really think 2020 and 2021 are going to be the years you could see big changes in anode technology. That is a game changer. That increases your energy density massively and can really give you that 1,000-kilometer car. And if you have a fast charging capability with it, it really is something that all consumers would find interesting to purchase. Fast charger technology is something that we're also talking about. There are some vehicles that actually today claim they have less than 10-minute charging times. That's really exciting, interesting. Let's see it commercially first, but that is an interesting area. Stationary storage is something, don't forget. Stationary storage is really exciting, and that's just not for these traditional metals. There's a lot of different stationary storage technologies out there. Vanadium flow is one that's really, really interesting. There's some sodium battery technology. But don't look at stationary storage as space doesn't matter at all. It matters less than it does an electric vehicle. But on the other hand, it actually does matter a certain amount. There are people who have space requirements. You can't have 100 acres of battery storage in many applications, but you may be able to have rail car or truck batteries that could have significant amounts of electrons being held. That could be very, very interesting. Nickel is the one metal that we continue to see concern about and worry that the industry will be able to provide enough nickel units for our EV forecast to produce. And if we were to see a very happy nickel price and it goes up into fly up zone, which in the past record highs for nickel were 50,000 per metric ton. If that ever were to happen, don't celebrate too much because the industry would probably switch to another material, and that most likely area would be manganese. Manganese has a lot of capability in this industry and may be a long-term threat to nickel. So we'll always move from one technology to another. And with that, I'd just like to end the conversation here and ask Adam if he has any questions.
Fantastic. Ken, thanks very much. That's great. That's really comprehensive. Yeah, probably a lot of questions coming out of that, but within our time frame, I've just got a couple actually. Maybe I'll start with one that's sort of more of a big picture question, and then get into some more specifics around some of the battery chemistry areas that you touched on. My first one was relating to something we talked about the other day, I think, when you were on a panel discussion, is around who's going to pay for this big transition, and who's going to sort of help this EV narrative accelerate or at least keep going down the path that it's going for. You mentioned China and Japan seem to be doing a lot of inward investment, lots of loans to mining companies or other companies within the value chain. What's the US position right now? And you mentioned, I think, when we spoke before about a Democrat government potentially being quite positive for the EV, for the progress of the EV sector, certainly in the US. Can you just comment a little bit more around that, and then who's going to be paying for this transition, certainly from a sort of a governmental support side, or if equity markets are not so buoyant for lithium juniors at the minute, is that capital going to come from other areas?
There's a lot of questions baked into there. I'll try to take them quickly. In terms of government, COVID and the response to COVID will give governments an opportunity to spend on the infrastructure area for this change. And governments are looking for ways to put capital to use to have very positive returns. This is something I've heard an interview with the German finance minister who said, that this is something really exciting, and I know the EU has put this into the recovery plan, that they will make big investments in the infrastructure. As for the vehicles themselves, I think the car companies are realizing that Tesla is a real company, is a real business, and a real competitor, and they're very petrified that Tesla just gobbles up all the market share out there before they're ready. And so the companies are quite able to put that into. When we get back to the minerals, that's sort of a different story altogether. They need price. And so, the recovery needs, the fear you will have, and this often happens in the mining industry, is that the EVs take off and there hasn't been the investment into the lithium space, into the nickel space, and prices will get well ahead of themselves. Now, when we talk to automakers and cell manufacturers, they say, well, relative to the cost of the entire vehicle, the materials aren't very much. And so if they doubled or tripled, it's only a couple percent. So that's good for prices, I guess, longer term, but there will need to be a response. And very similar to the iron ore industry years ago, which used to be very, very fragmented. And when China's demand exploded, you really saw the combination of really the three big companies sort of take control of that industry. The same thing could happen in the lithium space, where you just see a few of these companies gobble up a lot of assets, become really large players because they have that processing IP that can go into the marketplace. But I do think you need a transformation in this industry. I don't think an industry that we expect to be as large as it's going to be, talking about 10, 20, 30 times larger than it is today, can be serviced by a bunch of very small companies. Those companies need to invest a lot, and I think you're going to need much, much larger companies. So you will see some majors that could theoretically be the size of a BHP or a Rio or someone like that someday. And so I think that's something that needs to occur.
Yep. So a bit of consolidation, but scaling up of the real winners as well. Great.
Exactly.
Just on the supply contract side, you raised it as one of your questions before. Should OEMs be looking in long-term supply contracts for these materials? Are you advising in any particular way around this? I guess it maybe depends on the material they're looking at within their favored battery chemistry. But can you just give a little bit more insight on that question, or is it something that's much a case by case for the OEMs?
Yeah, I mean, I think in general it depends how concerned you are. First of all, you need to look at, okay, what is the car I'm going to produce? What is the battery am I going to produce? And how difficult is it to make that battery? I think what most of these companies are realizing, and you've seen virtually every single EV car company out there, there's been no sparing of companies who have missed production schedules because they can't produce the battery cells. So it goes Tesla and BMW and Volkswagen and Audi and Hyundai, and every single one of them, they come out with these great cars, and then all of a sudden you read a press article saying, oh, they've stopped shipments, or they're not going to produce it because of battery problems. From our talks with experts, it seems a lot of it has to go all the way back to the making of the cells and the materials that go into those cells. From that standpoint, it seems like you really need to have a bespoke chain of commodities coming into that. And so from there, we're saying, for the OEMs, they seem to be saying, like, look, we need to lock up supply. They don't want to become miners. That's obviously, they don't want to go that route, but they want to be tied up with the miners so that they can work hand in hand together to have the materials that they need. And there you could have a series of haves and have-nots, those who have locked up long-term deals for specific material and those who have not. And so from that standpoint, we do see the auto companies and the cell manufacturers looking for partnerships upstream, and you're looking for miners and refining companies looking for downstream partnerships. Just putting those things together is what we're going to see over the next few years.
Yep. Yeah, that comes back to your point about those strengths of partnerships being so critical. Another question I had is around the issue, the two sort of consumer pinch points around range and refill time. And maybe this is a bit of a novice question, but is there an issue around the battery chemistry when you set that battery to create it for greater range or recharge time? Is there a conflict in the sort of the metals that you put into the battery? Are you going to get greater range if you put this mix? Are you going to get quicker recharge time, but perhaps less range, or compromise on another performance element of the battery? You see what I mean? Like, there's always going to be a compromise at some point, depending on the chemistry that you put in. So what do you go for?
Yeah, now, and there's a few answers to that question. First, you have the cathode material. And what we know is that the nickel in that cathode material is what really holds the electrons. For example, cobalt was really in there to stabilize the structure of the nickel. But then, as people have gotten better and better doing this, they realized aluminum might do the same thing. If you look at the NCA batteries that Panasonic uses, there's only about 2% cobalt in that battery. So they found different ways to sort of work that area. But you want that nickel for the ability to take as many electrons as possible. On the anode side, that's been the one area that remember, 40% of the weight of a battery is the anode material, the graphite. Graphite is very, very stable, very well known, and can take a lot of electrons at once, which is the reason why it's been used. You are seeing a silicon injection into graphite. Remember, silicon can take up to 100 times as much electrons than graphite. So that gives you your energy density you're looking for. The issue is when it has those electrons, it tends to swell and then shrink, as does lithium chemicals. And it's that swelling and shrinking that you do the battery one cycle, it seems like the best battery ever seen. And then you run it for what you really need for a car, which would be several thousand cycles. And it's constantly expanding and contracting, just breaks the battery apart. So that cycle time, you talk to, and there's fans on both sides. I talk to some silicon anode people, and they're like, silicon's way in the area. it has so many more cycles, it's going to be the one to win the race. And then you'll have a conversation with a lithium anode expert saying, no, we're far ahead. At the end of the day, we can only sort of take it like what's hitting the marketplace. Who's going to actually commercially announce one of these materials in a real vehicle that will be seen on the streets? And that's sort of the thing at the end of the day. But those two things combined is what's going to give you sort of the density. As for the rapid charging, there's a bunch of different ways. There are some people who believe you don't have to change anything on the chemistry, but you can use a artificial intelligence. There's a company in the UK that uses artificial intelligence to sort of look at the battery and see where the electrons sort of lie and sort of put a huge batch of electrons in and then stop and then put it in and stop and put it in rather than sort of a drip, drip, drip. And they believe they can get, sub 15-minute charging that way. There's some technologies that use a nickel coating around the cell that allows a lot of electrons to flow in very, very quickly. So I think I've seen around 8 or 9 different technologies, all using different areas. Which one, again, works in the cold, works in the heat, works long-term, can have the cycles. That's what everyone's figuring out. But it does seem like we're pretty close to getting that. And just regular batteries are sort of getting there. Anyways, the next bottleneck was, well, can you have that many electrons go through a pipe so quick? And that's why the Japanese and Chinese agreement to have those 900-volt chargers is really interesting, because that would be a big enough pipe to really give you the electrons you needed. Now, doesn't mean you'll ever do it from your house, and it does mean you probably need huge infrastructure to have that type of electricity lines, because that's really not a light gauge, that's a mid gauge. More copper demand there. So there's a lot of different things going on.
It's interesting. It leads into my last sort of question, which is really, do you see a uniform future for EVs globally, or do you see it more fragmented? And I mean, with that, okay, let's say Scandinavian countries have maybe more requirement for a colder resilience in a battery. So they would take a model, I don't know, a Tesla or a BYD or whatever happens to sell well in that country. They would take a specific type of battery preset for that environment. The Chinese market might respond differently from the Canadian market, for instance, which we know has a greater swing in sort of temperature. And temperature is just one area I'm focusing on for an example, but do you see it very much becoming these pockets of different batteries adopted in different cars for different regions according to their commercial success or their environmental success?
Yeah, I definitely think so, especially if you start to see rules pop up like the European Union rules on ESG. It's going to force certain type of batteries in there and certain type of suppliers in there. Yes, you're right in terms of the way the technology is today. You would much more prefer an LFP battery, which doesn't care so much about the cold versus an NMC battery, which can see it. Although, then you would talk to people and say, yeah, but if you keep the battery warm, and Tesla has sort of a warming system for cold areas, you really don't lose too much. Anyways, so I think the technology is going to lead how this is going to be, but very much like what we saw in semiconductors and phone uses, you'll see a lot of different models out there, and certain people will find certain ones they like and don't like. But over time, it will actually merge together to something where you'll have a very high-end product, a medium product, and a low-end product. First of all, the automotive companies want to do that. They don't want to have, one car that fits everybody. They need to have a differentiation among their vehicles. And I think you'll see that both from a regional perspective and a price point perspective. So I think all those things will be involved that will make it. I don't think you'll see the world car, one car just dominating everything. That probably doesn't make sense.
Yeah, that makes sense. No silver bullet, but lots of options. That's good.
Exactly.
Excellent. Okay, well, fantastic. Look, thanks very much, Ken. Really great to have your insights there, and thanks for presenting and sharing your time. It's been good to get that.
Thank you very much.